Alright, good evening. I took some couple of trades this week. I think about 2 trades, one on AUD, one on, I think 3 trades, one on AUD, one on EURUSD, and one on GBP AUD. And I also called the trades out on my Telegram channel. So if you're not on my Telegram channel, you need to be there. You need to be in that channel. So I'm gonna do a brief explanation, a very, very brief explanation on how I took the trades that I took. This one is AUD. This is AUD chart here, and the trade is currently running. And I'm still holding, hoping for price to get to my take profit level. Alright, straight to it. Now this is the market has been moving from this part. Right, the market has been moving. Let's start from here. Let's just use the 4-hour time frame. The market was creating highs and lows, and highs, higher high, higher low, higher high, and then the market came down here and created a lower low. Right, meaning that the market changed. There was a change of character, and the market closed below this low here. Price closed below this low here. The low at 1.171040 or 1.17 thereabout. Now, as price closed below that, I was now waiting. Not just that, also there was a trend line here. I love using trend lines a lot. Trend line here, and I'm a breakout trader. So the trend line connecting the lows of this current uptrend, this current price movement here, was broken. As was broken, I expect price to do what? To fall down to this place based on something I call the 90% rule. 90% rule states or is that whenever price is moving in an uptrend or in a downtrend, and then you connect the trend line, once there's a breakout of that trend line, there's a 90% chance for price to move down to where that trend started from. So I expected price to come down to this level. However, instead of price coming down to the level, I was now waiting for an opportunity to enter the market. So I then spotted this pattern. This pattern is called a bearish flag. One of the most profitable patterns in forex for those that trade patterns. So the market moves in waves, or moves in something I call impulse correction impulse. So if there's an impulsive move to the downside, I expect price most of the time to correct and form what I call a bearish flag. So form a bearish flag, and after the bearish flag, it is expected for price to break out of the bearish flag and continue going down. It could not be a bearish flag, it could be a wedge, it could be any other pattern. However, in this case, this was what the market decided to do. And I said, okay, if price should break out of this trend line here, I'm going to sell. And of course, price did exactly that. Price came, went up, came down, got to there was a minor reaction here. If you go to your 1 minute time frame, you're going to see it. I'm just stuck on this 4 hours time frame. I love using 4 hours time frame a lot, and then probably 2 hours, 1 hour time frame. So, and once price broke out of this place, I was going to sell. So when price broke out, I sold, and currently I'm in profit. This is I'm currently in 1.41 hour right now. So I'm still expecting price to drop further. I expect price to drop further because overall I'm targeting price to fall to the low here. Expecting price to fall to the low here. So this is just it. There was a breakout of the bigger trend line when we saw an uptrend, and then we now waited for price to form a pattern for us to join the drop to the downside. So now another trade I took was EURUSD. Almost similar pattern formed on EURUSD. Very simple and straightforward. Now, like I said, price moves in waves. Impulse, when there's an impulsive move to the downside, then there'll be a correction. There's likely going to be most of the times correction, and then minor correction as if it wants to go up, and then boom, price continues going down. Right, this is not perfect, but price continues going down. So now that was what happened on EURUSD. Now I cited a drop that changed the market structure of EU. EU overall is bearish. Now I cited the market structure. I cited that price had broken this low here and came back, retested on it. So I was not waiting for the best thing to do. Certain times is to wait. Now price came down. Right, this was the impulsive move to the downside. Now this entire area was a consolidation phase, which we call a corrective phase. It's a phase whereby the market decides to relax after moving or dropping towards a particular direction. So how did I enter? Where did I enter from? Very simple. This was what I did. I now looked out for a pattern, connected the low here, connected this, and I was like, if price should break below this low, I'm going to enter. Very simple. This was a correction. If price should close below the low, I'm going to enter. And now price did that. Price closed below the low, and I entered. I took myself from this angle, from this place, stop loss here, and then where am I targeting? My overall target on EURUSD is this. That's the low here I'm targeting. So this is my overall target on EURUSD, right? And lastly, this was the second trade I placed. Lastly, I took a trade on GBP AUD, Pepperstone, right? Okay, now this was another beautiful trade that I placed. What did I do? How did I come about this trade? Now we can see that price has been dropping massively, creating lower lows, lower highs. Now what did I do? I connected the trend line from here, connected the highs, and then I spotted that price had broken out of this trend line. So of course I should be expecting price to move after a breakout to move 90% to this level here, to the top, where the trend started from. But what the price decided, price doesn't just move like that. It moves in waves. So there was an impulsive move to the upside. Over here. Impulsive move to the upside, right? Now, normally we expect price to continue going up, but it didn't. It didn't continue going up. So it created an opportunity for us to buy by creating what I call a wedge, a falling wedge. This is a falling wedge. If I draw the trend line very well, probably it could be a bullish flag. Bullish flag, bearish flag. Bullish flag is a flag that forms to give you an entry and tells you that the market is about to go bullish. You'll be able to know what the market wants to do just by looking at the patterns that's formed. In every consolidation, every correction creates a pattern in the market. Once there's an impulsive move to any part of the market, every consolidation you see creates an opportunity or creates a pattern that will give you an opportunity to flow in the direction of the market. That will give an opportunity to flow. It might not happen all the time, but when it happens, it is a very, very, very good setup to take. So these are the setups I took this week: Gbpaud, AUD, USD, right? They're still all moving in profit, and Euro USD.